Hey guys, good. I was gonna say good morning. Good evening. I hope you guys are doing well. Uh, Guys, I'm basically doing the stream with zero preparation. Okay. Basically, I didn't have time. Very simply, just didn't have time. So, uh, give me a second. Histogram. Oh, never mind. So basically, I'm going to take a look at the things that happened these past 2 days because on Friday, I think, Friday or Thursday, I think it was on Thursday, we were doing a stream in the premium section, uh, live trading, and I remember that both Igor and I were in a short, but then price was reversing, and I was keeping an eye out for an RTH gap that we had. So that was perfectly hit, um, and basically we're not getting into that 4-hour inverted FEG that we also talked about during that stream. So because that stream was private, I want to give you guys an insight of what we were looking for at the time. How did we manage to catch trades for it? Um, and what might happen next, basically. Okay, so what can come next this week? So context first. If you guys go on the CME chart, the CME chart will basically, and generally, depending on your settings, it'll basically have something that looks like this. Give me a second. I think I'm on the wrong template. Okay. So basically, when you come... No, wait, something's wrong. I wonder if Igor changed anything. Session, no. Because I have this gap here. Oh, this was Friday. Never mind, never mind. Yeah, that's right. What's confusing me is this gap over here. Oh, never mind. That was because of the holiday. Okay. So what happened? While we were in this section over here, and we were looking into this range, that's why I have that marked out. We were hoping for a reaction to that, hoping that volume profile holds, um, and the logic for us to target 84,390 was basically because we had the CME gap from the weekend, so from Friday to Sydney Open on Sunday. We had this huge CME weekend gap, right? As you guys know, those gaps usually have a very high tendency to be filled. Okay, so this was basically our target at the time, to basically fill that gap. And one thing that we have been doing with considerable success is to place an anchored view up on the opening of the New York session and trying to follow each trade that gets a reaction off of it. So the anchored view up basically is set at 230, so this candle over here, and then each time that we have, and for this you can use your own strategy, whatever, we just generally use divergences in inverted FEGs. So each time that price gets into it and then has our reversal signals, we try to get a trade off of that. And basically this was for our first target, getting over there. There was another reason that we wanted price to go up, which is When you go to the CME chart, by the way, for you guys to go to the CME chart, all you have to do is write BTC 1 exclamation point, and that gives you Bitcoin futures. You can click this. So you'll go to this chart, and then the cool thing about the CME chart is that you can click here where it says electronic trading hours and switch to regular trading hours. That's going to give you only the New York session, what happens on the New York Stock Exchange. And then you have two interesting insights. One is that you have these price gaps, which are basically the price action that exists outside of New York. So the whole Sydney, Tokyo, and Hong Kong session, and almost half of London session, right? Because New York overlaps with London. And you had this gap as well, and you had this gap as well. Or sorry, now we have that gap as well. Currently, at the time we had this one. So this one, for example, is current, and this one is still relevant. RTH gaps mean basically price action that New York hasn't been able to tap into yet. And it's one of those things that price just tends to act like a magnet into. So for example, right now, because we reached this point, another thing that we were looking into is where can we have a reaction off of, right? So getting into this was basically the target that we had, which I'm going to show you how you can connect it into Binance, or see which levels represent this price action on Binance. And I mean, I'm saying Binance, but you can use any other exchange, right? And based off of that, you can see, for example, this last candle, it ends at Friday, 9 p.m. on Friday. Generally, it's 9:14. The candle that closes at 9:14. Same as this one, but this is going to be Wednesday. So you're gonna have to mark out the closure of the candle at 9:14 on Wednesday, day 2, and the closure of Friday, day 4, at 9, right? And now we have this one as well, which is Friday 11. Okay, so what we would do is, so we would go to day 2, day 4, and day 11. So day 2 is over here, and the closure of that candle would, sorry, this is day 1, over here, which gives you this closure, right, over here. And then you're gonna have this one I already have marked out. This is day 4. And now we have day 11, which I also, sorry, this is wrong actually, day 11, which I also already have marked out there. So what does this tell us? Let me just change this here, copy this. So this was Wednesday, 2nd of April. Okay. As you guys can see, when we reached this level here, the RTH gap of 4th of April, Friday, we got a nice reaction, but then we continuously reacted from the anchored view up that started on the New York Open of Friday, right? Even though this is Saturday, price still has a tendency to use the view up and bounce from that. Another thing that I was marking out is that I did mark out on the session was on this price action. After this drop, you have this order block, a 4-hour order block, which is basically a breaker block, right? And price was never able to go through it, so it broke structure, used the breaker as resistance, and continued falling. We left this gap that became inverted, and that was a beautiful reaction zone for whoever took a trade today, because this happened today. Now, what am I looking into, or where would I be interested in? We have, generally I only keep the anchored view up from the previous Friday, so I'm going to keep this yellow one, and these two, they are connected to the New York sessions, but I'm going to connect it to the low. Okay, the difference is not that considerable, but it's essentially because this is a an important low. It didn't take liquidity. It is stacked liquidity down there, but we did broke structure from it. All right. So in order for us to stay bullish, I would want price to react on this zone over here, which is basically a 4-hour order block, and it's one of our targets. So if it filled that gap, now in theory it has to fill this gap. Okay, so this is where I'm interested next for getting into a long. This would also mean that we can, for example, have something like this as we are dropping, bounce from the anchored view up, and maybe take liquidity once again, have a divergence between these 2 points, and then break structure. I'm interested in this area. All right, this is what I'm gonna be looking into starting Monday or Thursday, and I'm gonna set an alert on this area. Okay, so this is done and this is done. Now another thing to consider is that so Friday started, give me a second, let me go into the 15. Friday ended here, and all of this, okay, all of this happened during the weekend. All of this price action, which is basically from this point to there, all of this is non-existent on CME. If I go to the CME chart, you're gonna see that we basically stopped here. So for example, if we stop here, two things about this. It doesn't really matter that on Binance, oh wait, sorry, I shouldn't have deleted those two guys because of this explanation. Let me just go back. Okay, it doesn't really matter that we filled priced up to here because it happened on a Saturday. Okay, sorry, Sunday. We got here on a Sunday. What this means is that even though price action came up here, if we need to specify a reason for it to react here and start dropping, the reason would have to be either this Fibonacci deviation or this inverted FVG. Because in terms of market, the New York Stock Exchange hasn't been able to fill this gap yet, and it will have a tendency to do that. Okay, this candle that we have here is the last one that we can see on the CME. So this candle over here, this white one, it's this guy. Okay, So what this basically means is that even though we might come down here to fill this gap now and react to this anchored view up from Monday, 7th of April, even though we can react to this, it's almost as if we didn't fill this gap yet. So the probability of us coming to take out this high is just as likely as we as if we didn't yet come to this area. Okay, so this is basically my ideal plan or ideal trade would be to come down here in order to fill the gap, but then reach this high. Okay, reaching that high, we can then talk about other plans and other targets. But this high is interesting also because it's stacked liquidity that we talked about previously on stream as well. Okay. I am aware that we do have equal lows down here, but it wouldn't be the first time that we leave equal lows left untouched. Okay, it just wouldn't be the first time. And because the equal lows are there, I obviously cannot ignore that fact. Because they are there, I wouldn't leave a limit long here. Okay, I would expect either liquidity to be taken or even for price to eventually fail here, because it's not mandatory that price does anything. Okay, it's not mandatory that it takes the equal lows. It's not mandatory that it fills the Wednesday RTH gap. None of this is mandatory. So you have to always take trades based on what the market does and not what you think it's probable. Okay, try to not forget that. Let me just, I had to delete some drawings there, so I deleted an anchored view up. Let me just set the Friday one over here. Okay. So right now we are essentially opening the Sydney. We're opening the Sydney market very close to the anchored view up. In this section over here, we already had a draw on liquidity over there. We already took this high here and then changed structure. So we might be in a downtrend until we get to this order block down here, which would mean filling the RTH gap. So for the Asian and London session, I would look into shorts targeting this area. From there, I would be cautious. Okay, be careful with the trades that you take. Take them based on reactions and not predictions. All right, see what price seems to want to do, and then go with that. I think that Monday is going to be a very conditional type of price action, and from there we can see what might happen. In my opinion, if this area breaks, it becomes very likely that we come for the equal lows then. If this area, for example, if we get a closure, not just a wick, if we get a closure below this order block, I'm not even looking at this low, alright? If we get a closure below this order block, I'm going to be looking into taking those equal lows down there, and then I have to zoom out more for this. And then the only reaction that I would be hoping for would be the 1272 at $72,622, or the daily level, which is 73127. All right. So I'd be looking into those two areas for a reaction, but not before. If that if this order block breaks, if we get for example, a 1 hour or 4 hour closure below this area, I'll be looking into reaching 73k. But basically, that will be it. I want this area to hold, otherwise, not that interested. Another thing that we can talk about is the levels. So let's mark out VWAPs and points of control. Give me just a second for it to load. So we have naked VWAP at 82k. Oops, wrong template. We have naked point of control. Another one down here. And I'm very hesitant to mark out these two levels down here. I think that reaching those equal lows will cause a reaction for sure. Just from taking out everyone that bought there and is still trying to hold. So I think that the SFP itself would be the reaction, not exactly these levels. I don't think they're too relevant, so I'm not going to mark that out. The expansion POC can go away as well. Okay, but I am going to mark out this guy. Yes, that's 68k, I know. That's bearish. But let's just keep it there, marked out. So, yeah, we might as well mark out this guy too. And that guy. I don't know if it's too relevant to mark out these levels so far ahead of time, but just in case I forget. Okay, so looking at structure, let's see if we have anything relevant outside of what I marked. Let's hide levels now. If you want to take the opportunity to pause the video and take note of the levels that I have, be my guest, this is the time. Let me check vectors. Okay, we did have a little bit of an inverted gap here, possibly reacting to it. I wouldn't mark out anything that exists down here. Maybe this one. I'm just not as interested in it, simply because it's not a vector. No other reason. No other reason. For example, I was very interested in instantly notice this guy because it is a vector. That high was a vector and we got a nice reaction off of it. Normal FEGs don't usually represent that much volume, as you guys know, if you understand the concept of vectors. So, but yeah, let's keep it anyway. I'm gonna drag this until Tuesday. This is relevant only for now, and I guess that is it. So I'm going to This is irrelevant now. This order block as well. This volume as well. This too. This too. This too. This is just from the previous session. Okay. Okay, I guess that's it. So if you wanna pause, now's the time. I am going to post this on the group anyway. Okay. And I guess this is it. So these are the levels that I'm looking into in terms of price action. Not wanting to be predicting stuff, to be honest, but I would say something like this. This is what I would like to see. A double reaction here with a div here would be ideal. So let me download that, and now let's look into yen, because I really need to prepare this one as well. Let me delete all of this stuff. This is Friday. Okay. Okay, we got to the naked point of control. Jesus, looks bearish, doesn't it? I hate this choppiness over here so bad. This is essentially bearish because we took this with that Trump manipulation, crazy Trump manipulation. And the problem right now is that we're gonna have, for bullish people, the problem is that now we're gonna have all of this as a range, which the POC is 145.419, and this is also going to be a 4-hour inverted FVG. So I think it's gonna take a lot for price to be able to push through this, and even if it does push, we're gonna have this very mean looking order block. All of this consolidation is gonna be hard to push through as well. If it continues to drop, the only place that I'll be looking in, for a reaction is this low, 139.573. That would be the only place, because I don't want to take trades based on either this range or this order block, because it has been tested, reused like 1, 2, 3, 4, 5, 6, 7 days. So I'm really not interested in this. It's basically being hammered. So the more it gets tapped into, the weaker it gets. So if we do flip, I'll be looking into taking these highs. Okay. At 151.301. So now the plan would be, when Sydney opens, which it has already. Now the ideal scenario would be to come here, react potentially to this order block, or to just fill the gap but react from there. I'm not interested on the order block because I think this is a little bit close. But either this order block or this POC, let me mark out the POC. One of these two areas are my points of interest for a long. The long would be to target the range POC or the top of the inverted FEG, which by the way we have liquidity close, so that could mean two reasons for a reaction. If we are able to keep pushing through it, then I would be looking into 151301. But this will be hard to push through, I think. Let's see. So let me switch to 4 hours. Oh, I forgot. Let me just check vectors. Sorry, levels. Oh, that's interesting. Previous day view up here. Nice. That's nice. That's a good confluence. What's the fib? Okay, 0.5. Yeah, this is nice. Let me see where the 2 is. Okay. Ooh, that's crazy. This 618 extension, that's crazy close to the range POC that I marked up. Interesting confluence. I like that. I like that. That's cool. And I think that's it. Yeah, I think that's it. So wait, give me a second. Let me stretch these guys out. I'm gonna delete this guy. I think it's very unlikely. Okay, this way. I'm gonna post on Discord 2 screenshots of this. One on the 15 minutes so you can see these levels close because they're the reaction zones. But another one. Oh wait, maybe. Yeah, it's easier this way without the levels indicator. Okay, like this. And now the 4 hour. Let me try and show the equal highs up there. And hide this for this image. Okay. I think that's it. So let's just check. Ooh, gaps are done. Let's check Nasdaq then. These are very old structure points. Damn. Very old. And it bounced down. It reacted from daily levels, which is even more bearish. Apparently it came to this area as a reaction zone. Let me see what's the POC over there. Sorry. I would say that's close enough. That's interesting. Okay, so the only problem that I really don't like is this instability. Let's check it out closer. Okay, we still have this gap over here to fill. Getting close to doing it. Then we have another one over there. None to the downside, which is good. And this is, let me just use Friday's view up. Friday. Okay, it's over here. So for the Asian and London session, I would be looking into 2 view ups. This low. this low and that anchored VWAP, which is from last Friday, right? So let's change it to electronic trading hours. Yeah, okay, that looks nice. Check it out, levels, reaction points, previous day VWAP and POC at 19,670. And after that, I would only be looking at 20k, almost 21k. This one. Which basically has the naked point of control as well there. I would only be looking into that, to be honest. Let's do a TR pocket from the low. Hide levels. Okay, gives us the 618 on the previous day VWAP, barely. Where's the number 2? Too high. What about 1618? Yeah. Okay. Kind of a no zone in terms of deviations over there. And I mean, this is just liquidity, right? Just liquidity. It's interesting where the top of it is in comparison to deviations. Because like the biggest consolidation area, I don't even know where to mark it from. Maybe like this until it breaks. Yeah, this area kind of gives us the second deviation, and this low here, previous structural point, right? This low is basically at the same spots of the naked point of control in previous day VWAP, so that would be interesting. This 618 is basically super close to daily levels, so let me see if we have new dailies. Just this one, I would say. Yeah, okay. I would be looking into it keeping the trend, like maybe range here a bit more, but bouncing from the VWAPs. If they don't hold, I think we're just gonna continue going down. And if we do go down, this block will not hold again. It's gonna break and it's gonna be ugly. It's going to be ugly because this section over here, for me, is just liquidity. That's bad. So ideally, we want the anchored VWAP to hold. It might range, but ideally we want it to hold, push through these daily levels, and then we would have to talk again, check the chart again. So I'm just gonna take a screenshot of the 15-minute chart. Let me mark out this naked point of control here. And that's it. I'm not interested in anything else. Okay, download. Let me do the 4-hour. And download. And that is it, guys. So I'm gonna post these images now on Discord and go to bed. I gotta get some rest. Tomorrow is gonna be tricky, in my opinion. But I'm especially interested in Bitcoin for this type of price action. Let's see what happens. But this is essentially what I'm looking into. I would be really interested in getting along here. I think it can be powerful. If it doesn't hold, oh man, I don't know. But this is essentially what I'm interested in. Alright, guys, if you have any questions, as usual, go to Discord, tag me, and tell me what you want to know. And trade safe, guys. Hope you guys have a nice week. Bye bye.